Hello everyone, welcome back to the channel. What was that? Welcome back to the channel. Hi everyone, welcome back. Or if you are new here, my name is Gabby and I love to talk all things personal finance and lifestyle and anything I feel like. Thank you for clicking on this video and for joining me today. I am doing a series on my channel called Money Talk March. I keep forgetting the name of my own series. It's called Money Talk March, where I'm going to be talking money for, I said once a week in March, but we're actually just going to be stockpiling the last couple videos of March to be money related. Today's video is going to be my investing portfolio. I just want to put out the world's largest warning disclaimer with this video, okay? Because I am going to be going through what I have my money invested in. I am not a financial advisor. I am not. Do not buy these stocks and ETFs because of me. Do not, okay? I repeat it. Do not. I have learned my lesson with a lot of these. Just because I hold them does not mean I believe in them. I have a very simplified method of investing that I use today that is far simpler than buying individual stocks. But do I own individual stocks? Yes, I do. Huge disclaimer. I am not a financial advisor. Please do not go and invest in exactly this. Also, the market is currently ripping. The market is doing extremely well right now. So a lot of these stocks you're going to see I am up quite a bit. This is not the case all the time, okay? Not long ago, I was looking at this and crying every single time I looked at it. So please do not just go and buy these things. This is simply for entertainment. And I think that there are a lot of lessons in my investing journey that I've gone through. So I cannot describe how much I do not want you to go buy these things, okay? Please, this is not for that reason. I am not influencing you to buy these things, okay? That is nailed down. Second of all, I cannot dive into my investing portfolio without discussing my privilege as a person. So I have to talk about a little bit about my financial journey, and I do want to do a dedicated financial journey video talking all about this, but I do need to divulge my privilege because I have a lot of it. So I grew up in a very middle-class family when I was younger, very middle-class family. And then all of a sudden we had a lot of money. My dad worked his booty off in oil and gas in Calgary, Alberta, and there was an oil boom in the early 2000s that did very well for my family. So I do have a lot of privilege. There's no tiptoeing around it, okay? I do. I also came into a good amount of money through a inheritance. In 2007, my grandma passed away. It was awful. She was extremely young. She was 58 years old, and she worked numerous jobs all at the same time throughout most of her life. She was a single mom, and she worked her ass off to have a nest egg of money to retire and live off of as a older person. So she was 58 years old. She had a large nest egg. She had just built a house and she passed away tragically. Me and my cousins inherited money from her and her partner when he passed away as well. And I obviously have an inheritance from that. And that has been invested in the market since 2006. So there's a lot of money here in my investments that I did not work for. I did not invest myself. I would do anything to have my grandmother back. I do not want this money. I would rather have had more years with her, but that is the cards I was dealt, and obviously that puts me in a better financial situation than most people. So I have had money in my name invested since 2007. So just going to be completely frank there. Okay? This is not all money that I invested of my own cash myself. I do like to keep them separate because I want to track the amount of money that I have, put into the market myself. I am very proud of how much money I have invested myself. So I do keep them pretty separate, and I do want to do a net worth video where I will divulge the amount of money I have myself saved and invested, but it doesn't really benefit you guys to know how much money is gifted to me. It just doesn't benefit you guys. I want to show you guys what you can do yourself, okay? We're not all given the same cards, but I have to be completely honest here because otherwise I am lying. Okay, so I also will not be going into values, like how much I own of each stock. I did go through and just total up the value of each stock at this current moment. These stocks are fluctuating constantly, okay? And I just put it down as the percentage of my portfolio, like how much each item is, the percentage of my overall portfolio. And that includes everything, like my own money I've invested and then also the money that has been invested a long time ago, okay? So that is kind of how I'm gonna be doing this. I will not be giving exact numbers of how much money money I have in each thing just because I don't think it's that relevant to you. And I just want this video to be more fun and hopefully a learning lesson for you guys, because there have been lots of mistakes that I have made in the investing world. I also want to discuss the fact that I currently have a financial advisor, in the sense that I have a very close family member who is a financial advisor for work, and I don't pay them to give me ideas on what to buy and sell in the market, but they help me out lots. So I do have somebody that I consult for finances now. So if I do end up buying stock, things like that are outside of the realm of ETF and things that I typically would suggest other people to buy, it's usually because I have a second opinion on it. I am not choosing those things to buy. I also want to make it known that I do not want to be somebody who has to continuously check the market. I find no pleasure in waking up and looking at the market. My dad and lots of my family are like that. They enjoy it. It's fun for them. It's not for me. I don't like to track it. So if my financial advisor tells me that something should probably be sold, or, he thinks that a certain realm of the market is not going well, all that stuff. Of course, I have somebody to rely on. This is a hard conversation. I am struggling. I feel like talking about money is challenging, and I like to be open about my money, but obviously opening up about privileges that I have, it's just a little uncomfy, but I have to be honest, I do. Okay, so let's dive in to what I have my money invested in. Okay, so you are seeing this very quick little spreadsheet I made this morning. I didn't spend much time on making it look cute, okay? Do not judge this, but I just wanted it to be pretty clear on, what's going on here. Ticker on the left is just the ticker of the company. If I can remember what the company is, I will let you know. If not, I might just put it on the screen later. Then the next column is the percentage of my portfolio. As I mentioned, I'm not going to be sharing exact numbers of how much I hold of each of these items, but I will share the percentage of my overall portfolio, and then the percentage that it is up or down. So this is the little lesson here, because you're going to see I do have a couple stocks in my portfolio that have gone to zero, that have straight up, I lost everything on them. I think it is valuable to show you guys like the ups and the downs of all of this and how volatile some of these things can be. But I also want to just really, really put it into your mind that the market right now overall has been ripping. It has been going up. Things have been, if you have any stocks or you have anything invested in the market, it's probably up right now. And these things come in cycles. It goes up, it goes down. Talk to me in August of last year, I was, looking at my portfolio and crying a little bit. So I cannot stress enough that this looks generally very up and very well up, but this is not always the case. And you're not going to get these returns if you invest, especially now. If you take, for example, you took this video and you're like, wow, she made money on that, I'm going to go buy it today. There's a good chance that was the high, the peak for a couple years to come. So please, 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 I cannot stress enough. Do not just go and buy these things because you see that it's up a lot. Some of this is straight up just luck of the draw. It is at the end of the day. Okay, hopefully the disclaimers are very clear and transparent. All right, so the very first ETF I own is FBAL, and this is the largest portion of my portfolio. And this is a product from Fidelity, and it is a balanced ETF. So it is a very just general market. I think it's supposed to mimic like a 50% fixed to equities ratio. It's supposed to be like a very balanced product. It performs well, but it's not too volatile. And that is because of a predominant portion of my portfolio, I'm investing for a down payment on a house. Vancouver is extremely expensive. A 20% down payment is going to likely be over $100,000. So I have a large portion of my investments sitting in something that is not volatile, so that hopefully when the time comes for me to buy a house, I can sell this product and it's not down. That is the plan. So 21.58% of my portfolio is in this one product called FBAL, and it is up 11.5% to date overall. All time. Next is my RRSP managed. So this is my Wealthsimple managed retirement account, which I was investing in up until the end of 2023. Oh my God, I forgot what year it is. Yes, up until the end of 2023, I was investing in a managed account with Wealthsimple, which is a robo-advisor, meaning they invest your money for you. So they pick the products. I have no say in what they buy with that money. So 12.28% of my entire investment portfolio is my RRSP, and that is up 21.62%, which is very good. Go Wealthsimple. Then I have FCGB, another Fidelity product. So this is a bond product, ETF product, if I'm not mistaken. This product is something that I probably will look to sell once interest rates start to roll over. This is something that I was liking to hold because bonds were doing really well because we had interest rates were really high. You're actually getting a lot of money from bonds. I think the dividend on this product is really good. So it hasn't gone up a ton, like 1.25%, that's it. But I have been getting very good dividends from this product. So 7.8% of my portfolio has been invested in this. And similarly to the FBAL, this is some of the money that I want to use for a down payment. So I just kind of wanted a little bit of a safer product to invest my money in where I'm still getting returns and dividends. And one thing I love about Wealthsimple is they have an automatic dividend reinvestment system. So all of the dividends that you are paid, they will automatically reinvest it for you the second you get paid. I love that because I was never reinvesting my dividends when I used a typical bank as my investing platform. So I love that Wealthsimple automatically does this for me and I don't have to think about it. Okay, next up is the XSP. So this is the Canadian version of the S&P. It is the Canadian dollar version. And this is the next largest holding I have at 6.81%, and my average percent up and down is 28.8%. So in my investing video, when I said when in doubt buy the S&P, this is a great example of this. Oh, I completely forgot to mention this. Obviously I mentioned I had a inheritance that was invested for me. My dad did that when I was a kid. When I turned probably 22, 23, my dad started to kind of fill me in on what was currently in my investing accounts for me, and he kind of just pushed it onto my lap, said, "You're going to be in charge of this now. I am not in charge of this anymore." And that is when I really started to learn about investing and teach myself about investing. So I have been buying these stocks over the course of probably, I am currently 29. Yeah, I'm currently 29 and 22, let's call it. So about 7 years I have owned these items. So for example, the S&P being up 28.8%, that could well be an average over the last 7 years. This is not like I invested all of my money last year and it's up 28%. This is just the slow progression of these stocks, okay? Next is my cash. So I did include the amount of cash I have holding in my Wealthsimple. This is straight up just money that I can tap into at any point. This is 5% of my overall portfolio, 4.94, and I have a 4% interest rate, so I put 4% up in that. But every single month I get 4% cash back because it's in my Wealthsimple account. Next up is my managed TFSA. So this is the managed account I have with Wealthsimple that I've been contributing to since I had my job. And that is 4.53% of my portfolio. This is not all of my TFSA. I have maxed out my TFSA. So a portion of my TFSA is actually with individual stocks and things like that. But this is the robo-advisor portion of my TFSA. And this is sitting at 32.34% up, which is phenomenal. Very good. But this I have seen at 0% up. So this is the thing with investing is like, you really do need to have a steel gut. You need to be able to log in, look at it, and just take a deep breath and remind yourself that things go up and down. It's always cyclical. As long as you can sit and wait for the money to come back up, it will. Where people get into pickles is where they invest their rent for the next month. I don't know why people be doing that. That's crazy. Next up, we have Shopify. This is 4% of my portfolio. So this is the first individual stock we are seeing that is a large portion of my portfolio. 4% of my overall portfolio. That is really big. And I think in doing this exercise, I didn't realize how much I owned of this individual stock because it is split up between a bunch of my accounts. Like I have 2 platforms I invest in. A lot of it is in this platform, and then a lot of it is in this platform, and then some of it is in the TFSA in this platform. So it was very spread out and I didn't have a good idea of how much I owned of Shopify until right now. And I do kind of feel a little bit off about the fact that I have this much money invested in one stock that is quite volatile. It is. It's up 49%, but it was down for a really long time. And I think I got into buying Shopify during COVID, like, you know, when the markets completely tanked. I bought a lot of it at the bottom and then I saw it go up a lot. And then I got really excited about it, kept on buying it. And now I realize it's a huge portion of my portfolio. I do think I could probably sell a portion of this, or I don't know. See, this is the thing. I don't really know what I'm doing when it comes to investing. I don't know if something is a large portion of my portfolio and I'm not comfortable with it, if I would sell a portion of it or just focus on investing further money away from this sort of product or this sort of riskier asset. I don't really understand like when you should sell. This is just, you know, thoughts of a girl who has taught herself a lot of this. Yeah, we are going to get into a lot of stocks, a lot of individual stocks. So I think all in all, most of my money is in ETFs and stuff like that, but there is a good chunk of it that is in individual stocks. But I have a lot of stocks purchased, so you can kind of think of them as their own little bundle of ETFs, although I am very heavily leveraged into growth stocks. So a lot of these are growth stocks. I do have like some banks and things like that to offset it a bit. I don't own gold or anything like that. So likely I am a little bit riskier. My portfolio is probably a little bit risky overall. So as I mentioned, don't recommend all of this. Next up, I have Microsoft at 3.75% of my overall. We skipped over Aritzia. So another thing I do prioritize is getting a lot of exposure to the Canadian market and then also to the American market. And then I have a little bit of overall global market as well. So I do have certain companies like Aritzia. I don't actually own Lululemon, but I was considering Lululemon, TD Bank, Royal Bank, things like that are Canadian market, just to have a little bit more exposure to that. So Aritzia is a big one. I love Aritzia. I've been wearing it since I was in grade 7. So it's a company I do believe in. It's 3.75% of my, or 76% of my portfolio, and that is up 69.3% overall. Next up, I have Microsoft at 3.75% of my portfolio, very similar to Aritzia, and that is up 100% overall. Didn't know Microsoft was doing so well. Good for them. Then I have Square at 3.6%. I am down on my Square overall, so this is down 11.4%. Reminder, stocks don't just go up, they go down as well. And I have a lot of money that was invested in Square overall, and it is down. I do believe in Square. I think it's a good company. I'm not worried about it. I'm gonna hold it, whatever. Then I have Nvidia. And if anyone has been following the markets, you know Nvidia is the new crypto. It basically shot up to the moon. So 3.5% of my portfolio is Nvidia. I would have had far less had the value of this stock not been so high. I don't think I actually bought that much in the first place, but it is up 450%. So that is why it's such a large portion of my portfolio. Then I have TD, a Canadian bank, that is 3.5%. I like TD a lot because they have a good dividend payout and they've gone up consistently for a really long time. So I do have quite a bit of TD. That is up 15.5% overall. Then I have my first home savings account, managed account with Wealthsimple. This is a newer account that I've been investing in, but I've been prioritizing quite a bit because it is a great account. It is both tax advantage in the sense that it is tax deferred, so you pay your taxes later and it's deducted from your overall. Your pay is lowered by the amount that you invest in this account. And then it is also a tax-free account in the sense that any gains in this account are also tax-free. I have been prioritizing this account for sure. It is at 2.87% of my overall portfolio and it is up 7.8%. This is also a robo-advisor account, so I do not have any control over what that is invested in. Then I have Tesla at 2.73% of my overall account, and my overall percentage gain in this for Tesla is 66.5%. That is far less than it used to be. I had a while where Tesla was my Nvidia. Now we have Apple at 1.75% of my portfolio, and that is up 21.64%. Then I have Starbucks. I love Starbucks. Gotta invest in Starbucks. So that is 1.56% of my portfolio, and that is up 20.63% overall. Then I have Berkshire Hathaway, BRK.B. I don't know what the .B is, the change on that. That's got to be something, but that's 1.26% of my overall portfolio. That is up 130%. Wow, well done, Berkshire. Okay. Then I have Meta. That is 1.25% of my overall portfolio, and it is up 65%. Then I have Vanguard. That is 1.11% of my overall portfolio, and it is up 48%. Then I have FBTC. So this is the Fidelity Bitcoin ETF. So you can buy this within my retirement accounts and in my TFSA, because previously I was not able to buy crypto within those accounts, but this is exposure to those items. It's basically directly linked to Bitcoin, but it's a Fidelity product, and I've been buying that a little bit, a very small amount in my retirement account. Just in case it helps me. So I have 1% of my portfolio in that. That is 63.36%. Then I have Revolve. Revolve has not done well for me. 0.72% of my portfolio, and that is down 25%. Then I have ETH. So literally straight up ETH purchased in my crypto account. So this is 0.7% of my overall portfolio, and that is up 59%. Had you asked me a year ago, this would have been down 59%. So yeah, that's the wording on crypto there. Caterpillar, I have 0.66% of my overall portfolio, but that is up 208%. Caterpillar is absolutely ripping. Then my non-reg account that is managed. So for a little while, I set up a non-reg account that was a robo-advisor with Wealthsimple, not knowing that I should definitely invest in TFSAs and RRSPs first. So I opened this account and I was contributing to it on a regular basis in my out of my paychecks, and I do not put money into this account anymore. I will once I, have maxed out my tax advantaged accounts. But anyway, this is 0.61% of my overall portfolio, and that is up 16%. Then I have Amex, just, good old Amex, and that's 0.6% of my portfolio, and that is up 156%. Then I have Visa, that is 0.6% of my portfolio, and it is down 18.34%. Then I have Royal Bank, that's a Canadian bank, so more Canadian exposure. That is 0.39% of my portfolio, and that is up 30%. Then I have JP Morgan, an American bank, to try to get some more diversification. That's 0.36% of my portfolio, and that is up 109%. Then I have Dine Brands. This is a purchase that I made during COVID when, people were like, restaurants are gonna get hit really hard. So I bought a lot of more restaurant-based things. So this one is a COVID purchase. It is 0.34% of my portfolio. It is up 55.2%. Then I have Fortis, which is a Canadian power, and basically they do like gas and electric and all that good stuff in Canada, and they kind of have a monopoly on it basically. So I think they're going to be around for a really long time. That is 0.32% of my portfolio and down 1.75%, but they do have a good dividend they pay out. Then I have Bitcoin, which is 0.31% of my portfolio. That is up 107%. As crypto is doing crazy right now, especially Bitcoin. Then I have ARKG. So this is Kathy Wood's ARK is her ticker for a lot of her personal ETFs she creates. So this one is their genomic revolution. It was a COVID buy. She was going chatty about all this crazy tech that's coming, and I think she was onto something. She's just not 100% right about everything. So this is down 61.9%, and this is only 0.23% of my overall portfolio. Then I have XEQT. This is something I'm trying to buy a little bit more of, or I'm trying to find more global ETF products just to get a little bit more exposure to the overall global market. This is something I'm prioritizing 2024. So this is a low portion of my portfolio right now, but I do want it to be a larger portion as I invest regularly. So this is 0.18% of my portfolio, and this is up 7.9% to date. Then I have Tencent. So this is trying to get a little bit more exposure to some global market, and this is 0.15% of my portfolio, and it is down 31%. Then I have Alibaba, also down. So this is also 0.15% of my portfolio and down 65%. Then I have HD. I don't know what that is. Not gonna lie. What is HD ticker? Is this a typo? Home Depot, of course. Okay. Yes, I own a little bit of Home Depot. This is something I was trying to invest in a little bit, as it's just a good solid company that's been around for a really long time. I think also has a good dividend. This is 0.09% and 12.5% up overall. Then I have FETH, which is the Fidelity Bitcoin product, but this is the Fidelity ETH product where you can buy ETH. I think these are only available to Canadians. I don't think you were able to buy these. Maybe now that there's been more legislation around it. But anyway, 0.04% of my portfolio, up 33%. Then I have SPY. This is also something I've been trying to buy more of. So instead of buying just XSP, which is the Canadian dollars version of the S&P, this is the S&P American version. So I was told to buy both the Canadian dollar and the US dollar just in case, because the Canadian one, if the Canadian dollar tanks, then it is directly tied to that. So I will be increasing the amount I own of SPY, but this is 0.03% of my 0.03% of my portfolio and 5.3% up. Then I have Space. This is a wild one. A company that's doing crazy shit with space stuff. I don't know much more of it. It was a COVID buy. I was just playing around with things. 0.02% of my portfolio, down 91%. Warning. Then I have Sky. This is a company that I believe I got paid out this portion of their stock because they split from something. I never actually bought this ticker. I was like, it just showed up in my portfolio and I didn't know why. So it's basically 0% of my portfolio. It's so small and it is up 294% apparently. I think I had $8 of it or something crazy. So yeah, nothing. Then I have AUSA. I think this is Australis. I think this is one of my learning lessons. So this went down to negative 99%. So I basically own nothing anymore. Then I have THC. So this was from the weed boom in Canada. So I had a little bit of money where I was investing in some weed stocks back when legalization happened in Canada because there was a big bubble with weed stocks and I got really excited about it. I invested some money and I basically lost all of it. So this is my reminder I hold in my account to not buy the bubble. It's a nice little warning for myself. So this is down negative 97.95%, not very good. And then I have at the very bottom, Very Good Foods, or the Very Good Butchers. So this is kind of sad. This is a company that I grew up around in Victoria. They make amazing vegan, vegetarian meat products. So I believe in these products and I love their products and I loved their restaurant, but they went public and they unfortunately are no longer even on the market. They went to zero. Negative 100% on that, unfortunately. That is basically everything I have invested in over my life. I hope that was exciting. I know somebody commented on one of my videos, they wanted to see this. So I hope this was somehow fun for you to watch. I cannot stress how much these stocks being up as much as they are is kind of, one, a mixture of time. I have had a lot of time to invest and for these things to go up and down. And two, it is just the way the market is right now. Everything is kind of up. Everything is rallying after everything was down for so long. You could check in a month and all these numbers would be, completely down. And that is the risk of investments. Things go up and down and you kind of have to have a steel gut and belief in the companies you are investing in that they're going to come around again. And if not, then you should try to sell them, of course. But I try to buy things that I believe will be around for a long, long time because I want to hold stocks as long as possible. That's kind of my investing philosophy. I am not here for a quick buck. I am here for at least some returns in the overall market when I need to pull money out, things like buying a house. And then otherwise I am investing for retirement and just wealth in the later days of my life. Compound growth, baby. So I hope that was kind of fun and interesting. As I mentioned, my personal belief that I would share with you guys is to invest in ETFs and general bundles of products instead of having to look at all these stocks. Like, did you see how many goddamn stocks I have to watch? That's why I have a financial person who is looking at that for me. Yeah, I don't have to worry about it as much. And it's not something I would want to do. I think my next video, I'm gonna do a financial journey just to talk to you guys about how I developed all of this knowledge on money because I definitely taught myself a lot of this, and how I have changed my spending habits because I used to be a chronic spender where I would spend every single cent I had and I would go into debt, and I've completely changed that around. So I think that will be my next video. But yes, thank you so much for joining me. I hope you enjoyed and I will talk to you guys in the next one. Bye.